Good day, everybody. This is Mynor Ramos with the TOC agency, and we have also,
Francine Carrillo Walters with Walters Asset Protection and Mortgage.
we're excited because we're going to be launching a new mini series. I know you guys have enjoyed the previous ones, and in the other series, you have actually been able to see the different topics about insurance, how to use insurance. We've also talked about legacy planning, and all of these things are important. But as we talk to clients, we start to realize that in order for them to get to that point of being able to afford or be able to take advantage of the solutions that we have, sometimes they have to go to the B word. Oops, I said it. The budget, right? The budget. Oh boy. So one of the things that I have to tell you is I don't use the word budget because budgets don't work. There's a guru out there, very respected in the community, especially in the churches, that only uses that as a budget. And while I respect the concept and what people use it for, there's a reason why he does that. The guru says, he calls people kind of certain names that I don't really like to call any of my clients, but he uses those terms and things like, I don't know, like let's just leave the terms out. But the idea is that people just do some boneheaded moves. I mean, let's be frank about that,
Right.
right?
And we have to be good stewards
That
uh,
is absolutely right.
of the blessings. And so we must be good stewards. I agree with that. We have to be good stewards.
It is. And so when you take that into consideration, we're talking about people just take their money and they it's a cycle they live in where money controls them. So the term is living paycheck to paycheck, and I think that's actually a wrong term because it's more like direct deposit to direct deposit. I think it's a better.
Yeah.
I'm not making fun of the fact that people do have some issues with cash flow. We like to use the term cash flow because that's literally what it is. We want to talk about the movement of money, we want to talk about the velocity of money. So, in this, with Walter's, asset protection, mortgages, right? That's a big factor. Debt is a big factor. Qualifying for debt to income. So
Mhm.
sometimes debt just kind of gets in the way. I mean, what do you think, Francine? If somebody comes to, apply for a mortgage, I mean, are we going to talk about this topic?
Absolutely. And so that debt to income ratio is huge. And before we can ever protect assets, we've got to accumulate them. And we have to do that by properly not only being good stewards of what we have, but then also later you can leverage your credit. But first you've got to get good credit.
Right.
And so all of those factors come into play when you're trying to accumulate assets to manage to be able to protect something so that you can leave that legacy behind and establish that generational wealth. So it is the first step. It most definitely is for those that are struggling
Mm.
with that aspect for sure.
And so when we talk about the struggle, when people come to you, and it doesn't have to be anyone in particular. I think this is pretty common in our industry.
Yeah.
So some people will come to you from many different aspects. You might get the one family or individual that just has no plan at all, right? That's probably like the worst case scenario. Like they don't track anything. They don't use anything, and then they might have the concept of budgeting. I mean, what are you seeing out there when you're meeting with clients and obviously respecting people's privacy just in
Right.
general?
Well, typically, the people that we see that struggle with that will come to us, or a lot of them, especially right now in these economic times, are business owners that are struggling. And
Mm.
they were, doing great, and then now they're not doing so great because of the economy. And then so a lot of it has been businesses or business owners who were in a different situation and now they're not in that situation. and they're struggling, or people that were like in my case, a mom that, had their family, two-parent homes, and then for whatever reason, it's no longer a two-parent home, whether they became a widow like I did, or whether that relationship is dissolving for some reason. And so people are struggling economically for many different reasons. It's not necessarily that they weren't good stewards. There's so many outside factors that come into play and can harm somebody's financial situation. And so, to be perfectly clear and fair, that it's not necessarily somebody is not being a good steward. Sometimes life happens and there are things, there are solutions, and that is the good news. On a Friday, we have good news. There's
That's right.
solutions. You don't have to be in that hole. You can come out of it, and there's ways to do that.
Great. Well, that's a good segue into, there's a lot of mention of a topic that it's just gaining a lot of traction online, and this concept of infinite banking. And so, we know the infinite banking process, and how that works, and you've talked about in some of your trainings. But here's before people can get to infinite banking, this topic that we're talking about of solidifying the numbers and understanding and taking control so that money never rules over you, but you rule over it, right?
Absolutely.
One of the ways that people can do that is this concept of velocity banking. Now, there's other terms that people have been able to use, to coincide with it. The most common one is velocity banking. And I mean, in the history of it, we're going to have an opportunity to go and do a short a mini series to break it down. So how exciting is it going to be for our audience for them to walk through this? And it's not going to be one long session. We're going to break it up into bite-sized pieces. So I think that would be there is a cash flow problem. There is an inflation problem. There is a money problem, right?
Yes.
So,
Yes.
so we're going to dive right into that and just really give people some tools, to go by. So stay tuned, everyone. Make sure that you hit not only the subscribe button, which really it helps the algorithms so that if you like and enjoy our content, then YouTube will give you more of it, right? Second, you want to hit that bell, that little bell that says, hey, when Walter's Asset Protection and Mortgage is on, when asset legacy planning is on, I want to know more about it. So if you click on that little bell, it'll actually remind you when a video is coming up, because YouTube is just cool like that, right? So what do you think, Francine? Should we get to the segments? Let's go ahead and break it up.
Absolutely. Let's get
All
to
right.
it.
Stay tuned, everybody.